Good morning, everybody. It is Monday, August 9th, and this is our morning drive live. So, I want to talk today, kind of a follow-up to one of the videos from last week, which was about Cigna dropping their reimbursement rates, and follow up with that about making the decision to go out of network. Excuse me. Now, I know there are some people who say every dentist should just be out of network with every insurance. That's the way it should be. And, while I agree that a large number of dentists can and should absolutely be fee for service out of network, that makes life easy. It's, the best way for a dental office to operate as far as patient care. It's not feasible for every office in the country to do that. First of all, you're never going to get the DSOs to drop their participation. It brings them patience. And, when you go online and you go to any of the insurance companies' provider searches, when you do a search within 10 miles, 15 miles of your home address or your office address, the first 50 listings that you see are all going to be for DSOs. That's just the way it works. They have special contracts. They get different rates. That there are advantages for them to being in network. So you're never going to get them to drop their participation. So just not going to happen because it brings them business. So the second thing that we need to look at is, demographic feasibility, which is how many other providers are in your area within 1 mile, 5 miles, 10 miles of that are in network and are close to your office, because they are going to be your competition. We already know Delta Dental sends out letters when you go out of network telling the patients that you have gone out of network. And here is a list of 25, 30, 40, however many it is, other providers in your area who are in network that the patient will save money by going to. We also know they like to make it difficult in most states by not allowing assignment of benefits to an out-of-network provider. I believe, and I have no proof of this as of yet, but I believe Cigna will follow suit with that and will be sending out letters to every one of your patients, letting them know you went out of network. This is the cost that there's going to be associated with visiting your office over and above what would be their cost had they gone in network. It's just going to happen. Every time they come to your office, the patient's going to get the EOB in the mail, and it's going to say you could have saved X amount of dollars if you had gone to an in-network provider. That's what I believe is coming. Delta has been doing it for years and has had, very little pushback for it. And I believe the other insurance companies will continue to follow suit. So, let's go over the things we have to look at in order to make the decision of, are we going to go out of network or are we not? Number one, absolutely, you have to know what your patient numbers are. It's a much, much easier decision to drop a specific insurance company, whichever one that may be, if you know that only 130 out of your 3,000 patients fall under that insurance company or fall under that fee schedule. So that's number one. We have to look at your patient count. Number two is, of course, we have to look at their fee schedule. And we want to know what their reimbursement percentage is of our UCR. So, again, if we charge $100 for a Prophy, the insurance company allows $80, they are paying 80% of your UCR. Now, you have to do that for every single service on the fee schedule. You have to calculate an average. That's just the way it is. But you need to know that, because just dropping your lowest paying fee schedule may not be the best call for your office. There may be one that pays a little more but affects 1/10 the patients. There's a lot of decisions that go into it. And then, naturally, the third thing we need to look at is our worst case scenarios. So you really need to know what it's going to do to your profitability if you lose 10% of your Cigna patients, 20% of your Cigna patients, 30%, 40%, et cetera, all the way up to 100. What is your worst case scenario? Your worst case scenario, which will never, ever happen, but your worst case scenario is you lose 100% of your Cigna patients. What is that going to mean to your bottom line? And what is it going to mean if you're able to replace those patients with fee-for-service patients, with patients paying your full fee? What is that going to do to your profitability? Excuse me. So that is definitely something you need to look at. Those are numbers you absolutely need to know. You need to understand them, and then you can make your decision on which insurance company should be dropped first, which one should be dropped second, if any should be kept. So again, there's a lot of decisions that go into it. If Delta represents 74% of your active patients and there are 106 providers within 10 miles that are in network, it's going to be a heck of a lot harder to drop those than it is to drop a smaller insurance company that maybe represents 100 out of 3,000 patients, but is paying you a little more. Get rid of that higher reimbursing, less effect insurance company first. Then you make your determinations from there and decide how you're going to move on. So that is it. I am here. Everybody have a great day. Know your numbers before you make a decision. That is the key. Don't make knee-jerk reactions. That is the most important thing for us to remember. So again, I'm here. Everybody have a great day, and I will see you guys tomorrow. Good morning, everybody. It is Tuesday, August 10th, and this is our morning drive live. I want to talk today again about secondary insurances, dealing with a patient that has multiple insurance plans. It honestly seems like I could write one entire book on the topic of secondaries and still feel like that might not be enough. But we're going to talk today specifically about overpayments from secondaries, how you get them, and what you do with them when you do get them. So, first of all, as we know, when a patient has 2 or more insurances, you are allowed to collect up to your full UCR for any services performed on that patient if the money comes from the two insurances alone. So I want to make that clear. If the patient has any out-of-pocket, the patient's out-of-pocket is based on the lowest in-network fee schedule that they have. So, if MetLife allows 100 for a service, Delta allows 90, and the patient will have an out-of-pocket expense, that fee becomes based on the $90, which would be the lowest in-network allowance. But if the patient has no out-of-pocket, then you can collect up to your full fee. So we're seeing a lot of this now with plans that do not coordinate benefits as a secondary. So, patient has a primary MetLife, a secondary Delta, and the secondary does not coordinate benefits, which basically means it will pay as though it's the primary no matter what. Even though there is a primary plan, the secondary will pay as though it is the primary. So you're getting overpayments, you're getting credits. So the first thing for everybody to remember or to realize is when a patient has two insurances, you should never do an automatic write-off, never do an automatic adjustment when you're submitting the claim or posting a service to the ledger. When a patient has two insurances, you should do absolutely no adjustment until both plans have processed the payment. They both may not pay, but until they've both processed the payment and you have both EOBs in your hand, that is when you do any network adjustments. And that's important because estimating becomes a little bit tougher. But please remember, there is in the group files, there is an Excel spreadsheet that has a calculator on it so that it will automatically calculate your adjustments, patient portions completely for you. It works perfectly. We spent a lot of time on it. I mean, months working on it, testing it, making sure it was right every single time. So don't be afraid. That's there for everybody to use, download, absolutely free. Take it, use it, enjoy it. It will make your life much, much easier. But we get back to doing that adjustment after both plans have made their payment or processed. So when I have both EOBs in my hand, that is when I will make an adjustment. So again, what we're seeing is, let's say we bill out $100 for a Prophy. We submit it to the primary. The primary pays 100% of their $60 allowed fee. Then we submit the primary EOB with the claim to the secondary for the Prophy. They pay, and they pay their $60 allowance. So you've now collected $120 for that $100 Prophy. What that's going to do is leave a $20 credit on the patient's account. A lot of reps, when you call an insurance company, won't know what to do with that. They won't know what the rules are. They're just, again, following a script or, honestly, a lot of times making it up as they go along. And you'll call and you'll say, we have an overpayment. and they'll say, just give it to the patient or leave it. It's a credit for the patient to use. Now, that is only true in two circumstances. Number one, if the insurance plan, either one of them, is a supplemental plan, then that is absolutely true. So think like an AFLAC or any other supplemental plan. Any overpayment goes to the patient. It belongs to the patient. They can cash it in. They can use it for future treatment. They can have you mail them a check. Whatever it may be, it's their credit to do with as they please. The second time is if it's what's called a self-funded plan. So, there's a lot of different rules surrounding self-funded plans that people don't always realize. But if it is a self-funded plan or a supplemental, that overpayment absolutely belongs to the patient. It is their credit to do with as they like. If it is not a supplemental or a self-funded plan, if it's a regular commercial plan, then that money has to be sent back to the secondary. And what you have to do is typically call the secondary, request a refund request, and they will send that to you, the refund request for the $20 overpayment. You write a check and you send it back to the insurance company with that refund request. Do not just out of the blue mail the insurance company a check for $20, because they will get it, they will cash it, and they will have no idea, even if you include paperwork, copies of claims, etc., they will never credit that $20 back to the right spot. So what can happen is when the insurance company does an internal audit, realizes there was an overpayment, requests the $20 back from you, you're going to say, oh, we already sent you the $20 back. You cashed it on this day. They are going to have no record of it, and they're going to just suck that $20 out of another payment in the future. So don't just send it back. Make sure you always have a refund request. If you don't get any satisfaction, if they don't send that when you call the insurance company, send them a letter requesting it. Don't include the check, just send them a letter requesting the overpayment. But remember, the only time that money actually does belong to the patient is when they have either a supplemental plan or a self-insured, a self-pay, self-insured plan. That is the only two times the money actually belongs to the patient. Other than that, request a refund request. They will send that to you. You mail them the $20 back, and you're good. If you just leave that $20 sit on the account, it's probably going to get used up for future treatment at some point. Somebody's going to use it to reduce a copay for a patient. Oh, you have a $20 credit, so your $50 deductible is only $30, which wouldn't be accurate. Or the patient's going to see it, it's going to hit 2 years, and technically you're going to owe them that money. So if you are sitting with a bunch of overpayments that you're waiting for refund requests that haven't been processed, and you don't want the patient to be able to use that money, create an adjustment type that is insurance overpayment correction, or whatever, name it whatever you want, and do that adjustment on those accounts to get rid of the credit. You can still see when you get the refund request, you can still check for that adjustment type and know that the patient did have a credit from an overpayment from insurance, but you just want to make sure it doesn't actually appear as a credit on their account. So hopefully that clears it up a little bit. I am here. Everybody have a great day, and we will see you tomorrow. Good morning, everybody. It is Wednesday, August 11th, and this is our morning drive live. So I want to talk today about a phone call that I got yesterday from a dentist in the South who has received a letter from the VA, from the Veterans Administration, requesting about $100,000 back that they have paid this dentist for services completed. And the reason the VA is requesting the money back is because the federal government is currently auditing a lot of things internally and has found that they have overpaid for certain services. And the vast majority of those services were scaling and route planing claims for this office over the past 3 years. And the reason the federal government feels that they have overpaid is because this office was billing SRP every 2 to 2.5 years on Perio patients, even though those patients were maintaining a 3 to 4 month Perio maintenance recall visit schedule. And the reason this is happening is because people don't understand the difference between a Prophy and a Perio maintenance. They are two completely different codes with two completely different services that we have to pay attention to. Again, the descriptor, the definition of the code. And what you have to remember is that the Perio maintenance code isn't just a Prophy for a patient that has undergone periodontal treatment, whether that's periodontal surgery or scaling and root planing. It is a different code. It's not just a Prophy. It includes, if you look at the definition of the code, it includes spot scaling and root planing of previously treated areas. So what that means is this: if you bill out an SRP and you do a 4341 and you do not define when you bill it out what teeth were actively involved, because obviously you're going to say oral cavity code 10 for upper right. However, what teeth were actually involved? We know it's 4 or more, but what if it was just 2, 3, 4, 5? And 6, 7, 8 were not periodontally involved. Certainly you're not going to do an SRP on those teeth that are not periodontally involved, but you're still doing the 4341 because it's 4 or more teeth per quad, and we have 2, 3, 4, and 5 all periodontally involved. So you did it on those. Now let's say the patient is maintaining their periodontal maintenance visit. Any scaling that needs to be done on 2, 3, 4, or 5 is inclusive to the periodontal maintenance. It's not rechargeable later on as an SRP. Now, if 6 and 7 become periodontally involved, that would be chargeable as a 4342. However, where a lot of offices have made the mistake is by not submitting the tooth numbers with that 4341 code. We always define the oral cavity code as 10, 20, 30, 40. That tells them which quadrant it was in. But we also define the tooth numbers because that's important for this later on issue if you do need to retreat other teeth in that quadrant. The other big thing that people don't realize, and again, I've said this already, is spot scaling and root planing is included in the periodontal maintenance code. So there is absolutely no possible way if a patient came in and you did SRP on, we'll say, 5 teeth in a quadrant, and 2.5 years later, that patient has maintained a periodontal maintenance schedule. They've had perio maintenance, even if it's twice a year, even if it's 3 times a year or 4 times a year. They've had periodontal maintenance. There's no way 2.5, 3 years later, you need to be billing for the SRP again, because you should have been doing the spot scaling and root planing on previously affected areas all along as you were doing the periodontal maintenance. So, the biggest, most important thing to remember to keep in mind is that is included in a periodontal maintenance. It's in the definition. Once the video uploads today here, I will post the definition of a periodontal maintenance in the comments, and you will see that the definition includes spot scaling and root planing of previously treated areas. So, please, please, please remember that, because I don't want you running into a situation where you're getting a letter from an insurance company saying, hey, we'd really like money back for this because you should have been doing it all along, because you've been billing for the perio maintenance, and the SRP you've been charging over and above for the same teeth or the previously treated teeth is completely inappropriate. So, please, please, please bear that in mind. Remember to go over this with your clinical team to make sure they understand the definition of the code. It is so important to understand that. And again, this is not an insurance company rule. This is the ADA saying this is what is included in this code. So everybody remember that. Keep that in mind. Stop rebilling for things that you should have already been treating, because everybody, insurance companies, the federal government, everybody is doing internal audits looking for ways to recover money. And this is going to be, I'm afraid, a big one. I am here. Everybody have a great day. I will see you guys tomorrow. Good morning, everybody. It is Thursday, August 12th, and this is our morning drive live. I want to talk today about paying attention to your numbers. So I finished a practice analysis yesterday for a client, and we noticed that over the past few years, there has been a significant difference in the amount that EagleSoft says was actually collected versus the amount that was deposited into their bank account. And, again, I'm not talking about a couple bucks. I'm talking about significant $50,000 plus per year differences. And one of the conversations we had during their review call was, how often is everything being balanced? How often are you comparing the deposit report from EagleSoft to the deposit report from your QuickBooks, from your bank? And the answer was, we don't do that. Who should be doing that? And my answer was, the dentist or the office manager should be doing that. That's something that is super, super important. Mistakes happen. I see big differences on EOBs if people aren't balancing their deposit at the end of the day. So, when I'm entering insurance payments for a client, you may have a check for $1,000, but when you total up all of the payments on the EOB, it's for $1,400. And, people will say, well, how is that possible? How is that there? The vast majority of insurance companies do not document on an EOB when they take money from a previously requested overpayment or refund request for any reason on the EOB. So, that's why it's important to, excuse me, that's why it's important to make sure your deposit balances at the end of every day. That way you are sure, excuse me, my goodness, you are sure that you're balanced, that all the money is accounted for. When we get those EOBs in the mail where the total of the payments on the EOB don't equal, excuse me again, don't equal the amount of the check, there's a difference there. And a lot of the time, we'll have to call the insurance company and say, hey, we got a check for $1,000, but the EOB payments add up to $1,222. And they'll say, oh, yes, that's because there was an overpayment requested, never sent back from a different patient. It could even be from a different office. And we took it out of that patient's payment. But they don't notate that on the EOB. And the only way you're going to catch that is if you're balancing your numbers every day. So, that's step one, is making sure at the end of every day, all of your insurance payments are entered, all of your patient payments are entered, all of your credit card payments are entered, and you're balancing with the paperwork. You're either making sure that your practice management deposit report for the day balances the total of all the checks you have, the total of the credit card receipts you have, balances your credit card batch at the end of the day. That's step one. Step two is then making sure that your deposit report, which we know now balances what we had in our hands between checks, credit card receipts, cash, whatever it may be, making sure that now balances with what was actually deposited into the bank. That is step two, and that is a super important check. And that's something that office managers or the dentist themselves have to be doing every single day. If you're not doing it every day, make sure you do it once a week. Make sure you're doing it regularly, because you do not want to be like this other office who, we now have to spend a lot of time and hours researching where could this tens of thousands of dollars go. 1 year, it's almost $100,000 off. And that is going to be a lot of time, energy, and resources to identify where all of that money has gone, how the practice management software could be so off from the bank. Like I said, there's a number of different possibilities, but the first one I think about is those refund requests never getting processed, never getting reimbursed. And, looking back through all of the checks written for this practice in Virginia, there's no refund checks sent back to the insurance company. So, I'm wondering if some of it was that. But also, there's missed opportunities for accounting there. And, this has the potential to turn into, you get audited by the IRS, and now all of a sudden you're hiding income from the IRS because it appears in your practice management software. It looks like you got the money, but it never made it into the bank. So where did that go? Was it cash that you just pocketed and you're not filing on your tax returns? It turns into a much bigger issue. So, please, please, please make sure your numbers are being double checked. You're balancing your reports at the end of the day and then comparing those reports to what was actually deposited in the bank. It is super, super important to make sure that is done. Every system in the office should have a double check, a triple check, a cross check, just to make sure everything is getting done the right way. So that is it. Check your numbers. I am here. Everybody have a great day, and I will see you tomorrow. Good morning, everybody. It is Friday, August 13th, and this is our morning drive live. So, first of all, happy Friday the 13th to everybody. But I want to talk today about third-party administrators and A, how they can affect us, and B, how we can use them to our advantage, because they are a sometimes overlooked way that we can increase our insurance reimbursements without actually having to negotiate with anyone, um, spend the time, the energy, the effort, which sometimes is absolutely worth it. But sometimes you're not able to do that. And third-party administrators are a good way to, we'll say, get past the negotiations. So, first of all, I just want to take a minute and kind of explain for the people who don't know what third-party administrators are. Basically, insurance companies will lease out their networks to other insurance companies. So, oftentimes we'll see, oh, well, when did I sign up for this principal insurance PPO? I've got an EOB saying I'm in network. When the heck did I sign up for that? You signed up with that because you're in network with United Concordia, and United Concordia leases their network out to Principal or to Trustmark or to any of the others that lease the United Concordia network. So what that means is you are in network with, we'll say, Principal through United Concordia. So Principal will pay you based on your United Concordia fee schedule. Now, there are also, in addition to insurance companies that lease out or share their network of participating dentists with other insurance companies, there are also companies out there that is all they are. They're not an insurance company. They are what's called a third-party administrator. They are a leased network. That's all they do, is you go in network with them. We'll say Carrington or Dynamax. They're some of the bigger, more common, well-known shared networks. And you go in network with them, and you can be in network with even some of the big companies, um, Aetnas and Cignas. You can be in network with them through a leased network. So you're not in a direct contract with Cigna. You're in a contract with Carrington that includes the Cigna patients. So what that means is now Cigna, instead of paying you for the Cigna fee schedule, or based on the Cigna fee schedule, they're now paying you based on the Carrington fee schedule or the Dynamax fee schedule. So when Cigna sends out letters, excuse me, that say we are reducing our reimbursements by anywhere from 10 to, now I have seen one over 70% for some services, that won't apply to you because you don't use the Cigna fee schedule. You use the Carrington fee schedule. And that does a couple things for us. Number one, the pitfalls of it are this: they will do what's called stacking, which means if you are not in network with an insurance company directly, but you are in network with Carrington and Dentamax and another shared network, because there's a bunch of them out there, and let's say Cigna leases all three of those networks, they will pay you based on the lowest fee schedule reimbursement that you have. So if your Dentamax fee schedule is less than your Carrington fee schedule, Cigna will pay you based on that lower fee schedule. So, that's called stacking. And that does happen. You can avoid that by either just picking one leased network to be in network with, to be contracted with, or by specifically opting out of certain insurance reimbursements through that leased network. So, the first step, if you are in network or you're looking to go in network with a third-party administrator, the first step is to get a listing of their leased networks. There are some in the group files. You'll be able to find them in there. But that's the first thing you want to do. Because if you see the same insurance company on, we'll say both Carrington and the Dynamax leased list, what's going to happen is they're going to pay you on whichever one is lower. So what you can do is opt out of participation with Cigna through Dynamax. That way you're only in network with Cigna through Carrington and will get reimbursed at the higher fee schedule. So, that's something that we can do to increase our income without having to see one more patient, without having to do any additional work. We can increase our income, we can grow our bottom line just by doing that, by paying attention who we're in network with through third parties and making sure that we're being reimbursed at the maximum level. So, please, please, please take some time, go through all of the shared networks that you are in, and a lot of the insurance companies will also lease out their network. Aetna leases their network. United Concordia leases their network. So, you want to make sure you're looking at those as well, because even though they're an insurance company, they're also doing third-party administrator work by leasing out their network of participating dentists. So take some time, go through that. It is worth the work to make sure you're being reimbursed at the maximum level. Because there's a lot of insurance companies that do not pay very well, that pay very well directly, that you can go in network with through a TPA, through a third party administrator, and get a much higher reimbursement. So hopefully that helps people. At least if nothing else, it'll give you something to do over the weekend. So everybody have a great weekend. It's Friday. Enjoy Friday the 13th. It's going to be a great day. Have a wonderful weekend. I will see you guys on Monday.